Hey there, welcome to your deep dive on EMS Limited. We're about to kind of wade into the world of Indian construction, specifically the fascinating niche of water and waste management projects. Our guides for this journey are EMS Limited's own annual report for fiscal year 2024 and their Q2 fiscal year 2025 presentation. Think of it as a crash course, perfect if you're curious about this sector, maybe even considering an investment. And you know this stuff matters. Did you know over 80% of Indians might be drinking contaminated water? That's a sobering thought.
Yeah,
And it really sets the stage for why EMS Limited's work is so vital.
it really does. That statistic highlights the urgent need for innovative water and wastewater solutions in India. And EMS Limited seems to be positioning themselves at the forefront of this challenge.
Okay, so let's dive right in. Can you give us a quick overview of what EMS Limited actually does?
They're essentially a one-stop shop for water and wastewater infrastructure projects. They handle everything from design and engineering to procurement and construction. That's where the term EPC company comes from, by the way. And they don't just build it and walk away. They also offer operation and maintenance services, ensuring these crucial systems run smoothly.
So they're not just builders, they're partners in ensuring these projects actually deliver on their promise of clean water and effective waste management. That long-term involvement is interesting. Now, their annual report mentions a water-positive Bharat. What's that all about?
It's their mission statement, essentially. Bharat is another name for India, so they're aiming to contribute to a water-secure India. It's a pretty ambitious goal considering the scale of the water challenges facing the country.
Ambitious, right, but they're not exactly a new kid on the block, are they?
Not at all. They were founded back in 2010, but only recently went public in September 2023. That IPO was a big success, by the way, heavily oversubscribed, which suggests investors are pretty optimistic about their prospects.
That IPO buzz definitely piqued my interest. It seems like they've got a solid business model. Can you break down their different segments for us? What are their main revenue streams?
Sure. Their bread and butter is construction contracts. Think of all the nuts and bolts of water infrastructure. Laying sewers, building those massive water treatment plants, even tackling industrial waste treatment facilities. It's a diverse portfolio within that construction segment, which is a smart move, right? Helps them weather any economic storms.
Diversification is key. Don't put all your eggs in one basket and all that. But it's not just about building stuff, is it? What about those operation and maintenance contracts you mentioned?
That's where the recurring revenue comes in. They're not just building these systems, they're making sure they function properly over the long term. It's like the warranty program of infrastructure, guaranteeing quality and building trust with their clients.
Smart move. Now, I have to admit, their manufacturing arm caught me off guard. What are they producing and how does that fit into the picture?
They actually manufacture a range of items used in their construction projects, like precast concrete components and water treatment equipment. It's a savvy vertical integration strategy. By producing some of their own materials, they can potentially lower costs and ensure better quality control.
Okay, now that's thinking ahead. They're not just relying on external suppliers. They're bringing some of that production in-house. But let's zoom out for a second and talk about the sector itself. Is this water and wastewater management market in India actually as big as they make it sound?
It's massive and growing rapidly. Think about it. India has a huge population, and rapid urbanization puts even more strain on water resources. The government is pouring resources into initiatives like the Jal Jeevan mission, which aims to bring piped water to every rural household, and the Swachh Bharat mission focused on improving sanitation. These are multi-billion-dollar programs, and EMS Limited is well-positioned to capitalize on this growth.
And let's not forget that over 2 million people in India were affected by groundwater contamination in fiscal year 2024 alone. The demand for clean water and effective wastewater treatment is only going to intensify. But with a booming sector comes competition. Who are EMS Limited going up against? Are they the big fish in this pond, or are there other players we should be aware of?
It's a competitive market for sure, with both domestic and international players vying for those lucrative government contracts. But EMS has some key advantages that help them stand out.
Right, spill the tea. What makes them competitive in this crowded space?
One of their biggest assets is their in-house expertise. They have a team of highly skilled engineers with specialized knowledge in all aspects of water and wastewater management. This allows them to tackle projects from A to Z without relying heavily on subcontractors, which can be a major advantage in terms of cost and quality control.
That makes sense. Having that deep bench of talent in-house definitely gives them an edge. But what about funding these massive infrastructure projects? We're talking serious capital expenditure here.
And that's where their asset-light model comes into play. They lease most of their equipment, which keeps their upfront costs low. and allows them to be more flexible in a dynamic market. Think of it as renting a car instead of buying one. You get the functionality you need without the burden of ownership.
Okay, so in-house expertise asset-light model. They're ticking the boxes for efficiency and strategic thinking. Anything else?
Don't forget about their strategic partnerships. They've teamed up with other companies to tackle larger projects and meet those stringent pre-qualification criteria that often come with government tenders. It's all about leveraging each other's strengths and expanding their reach.
Collaboration is key, especially when you're going after those big-ticket projects. But partnerships are only as good as the companies involved. What about EMS Limited's financial health? Are they on solid ground, or are there any red flags investors should be aware of?
Financially, they seem to be in a good spot. They've got a strong order book fueled primarily by those government projects we talked about. And here's the kicker. Almost all their projects are funded by the World Bank through government bodies. This means robust cash flow, virtually eliminating the risk of bad debts. It's a dream scenario for investors looking for stability.
World Bank backing. Now that's a stamp of approval if I've ever heard one. But let's be realistic. No business is without risks. What are some of the potential challenges they might face?
Well, the elephant in the room is climate change. India is already experiencing more erratic rainfall leading to floods and potentially affecting groundwater levels, which are crucial for the entire country. These environmental risks are something they'll need to navigate carefully.
Climate change is a wild card for any company operating in the water sector. What else is keeping their risk managers up at night?
There are the usual suspects like credit risk, liquidity risk, interest rate fluctuations, but EMS Limited acknowledges these risks and has a risk management framework in place to mitigate them. They're not burying their heads in the sand, which is always a good sign.
So they're aware of the risks and actively working to manage them. That's what we like to hear. But risk management is only one piece of the puzzle. What about their corporate governance practices? Are they running a tight ship, or are there any transparency issues we should be concerned about?
From what I see in their reports, they're taking corporate governance seriously. They have a clear framework in place with committees dedicated to everything from auditing and risk management to corporate social responsibility. They're ticking all the right boxes in terms of transparency and ethical conduct.
Transparency and accountability are essential, especially for a company dealing with public funds. But speaking of changes, I notice some recent shuffling in their management team. What's the story there?
Yes, they've had some interesting shifts in key positions like the company secretary and CFO. These changes could signal a shift in strategic direction, so it'll be fascinating to see how these new players shape the company's future. It's definitely something to keep an eye on.
Makes you wonder what's on the horizon, right? But let's shift gears for a moment and talk about their growth potential. We've uncovered a lot of positives so far, but what does it all add up to? Are they actually on an upward trajectory?
From a purely financial perspective, they're killing it. In fiscal year 2024, they saw a revenue jump of 48.55% year over year, and their profits are healthy. They're not just growing, they're surging.
Now that's some serious momentum. But are they showing any signs of slowing down, or are they riding this wave of success?
They snagged 3 new orders worth a cool 800 crore rupees post-listing, so they're clearly continuing to win contracts. And they're not content to stay within their current geographical footprint. They're actively expanding into new regions, which points to even more growth opportunities down the line.
Expansion and a steady stream of new orders. Those are strong indicators of a company on the rise. But are they just chasing short-term wins, or are they playing the long game?
One thing that caught my eye was their emphasis on attracting, retaining, and training top talent. They're investing heavily in their human capital, recognizing that their people are their biggest asset. It's a smart, long-term strategy.
It's all about building a solid foundation for sustainable growth, right? Investing in your people is never a bad move. But we've only scratched the surface here. We need to dig deeper into those risk factors and auditor concerns.
Absolutely. There are always layers to uncover.
Welcome back to our deep dive into EMS Limited. Now, in part 1, we painted a pretty rosy picture. Strong growth, solid financials, a seemingly bright future. But as any seasoned investor knows, due diligence means digging into those risk factors and those sometimes cryptic auditor concerns. What did you uncover in those reports that raised an eyebrow, maybe even a red flag or two?
Well, it's rarely all sunshine and roses, right? Even with a company as promising as EMS Limited, there are always nuances to consider. One thing the auditors flagged was a substantial working capital loan from banks, exceeding 5 crore rupees. They're making sure the company's monthly statements align perfectly with their actual books, no discrepancies. Transparency is key, especially with loans of that magnitude.
Makes sense. You want to be sure they're playing by the rules, no creative accounting going on. Did the auditors highlight anything else that might make an investor pause?
They also pointed out some delayed payments related to Provident Fund and employee state insurance dues. Essentially, there were some late deposits, including interest and penalties. Now, the good news is EMS Limited has cleared those dues, but it does make you wonder what caused those delays in the first place. Were there operational hiccups, cash flow issues? It's something to keep an eye on.
It's like a little crack in the otherwise pristine facade. Makes you wonder if there are other deeper cracks lurking beneath the surface. But overall, are the auditors sounding any major alarms?
No, not really. They're doing their due diligence, scrutinizing the financials, and keeping a close eye on the company's internal controls. It's their job to be skeptical. And it seems like EMS Limited is cooperating fully, providing all the necessary information. Transparency and a willingness to work with auditors are usually good signs.
Okay, so the auditors aren't exactly waving red flags, but they are highlighting some areas that require further scrutiny. But let's circle back to those environmental risks we touched upon earlier. Climate change is the big one, right? What are the specific concerns outlined in their report?
Climate change is the looming threat for any company involved in water management. And EMS Limited acknowledges that it's already affecting their operations. They're experiencing those increasingly unpredictable rainfall patterns we've all been hearing about, leading to flash floods and potentially impacting those precious groundwater levels.
Right, and groundwater is the lifeblood of India, essential for agriculture, communities, everything. If those levels decline, it could have a ripple effect throughout their entire business. What are they doing to mitigate these environmental risks? Are they just acknowledging the problem, or are they actively taking steps to address it?
Well, while they haven't outlined specific mitigation strategies in these reports, their awareness of the issue is a starting point. They're clearly factoring climate change into their risk assessments, which is crucial.
It's like they're acknowledging the storm clouds gathering on the horizon, but haven't quite figured out how to build a sturdy shelter yet. It'll be interesting to see how their approach to environmental risks evolves. But let's pivot back to their corporate governance framework for a moment. We touched on it briefly in part one, but what are some of the key elements they're emphasizing? Is it just window dressing, or are they walking the talk?
Well, they've gone beyond just lip service. They've established various committees to oversee different aspects of the business, auditing risk management, even a dedicated corporate social responsibility committee. This structure is designed to ensure accountability and that decisions are made with oversight and diverse perspectives.
Well, it's all about checks and balances, right? Making sure no one person or department has too much power. And remember that whistleblower policy we mentioned earlier, that's another positive indicator. They're encouraging ethical conduct, not just talking about it.
And they're not just focused on internal ethics. Their annual report highlights their commitment to human resource development and creating a diverse and inclusive workplace. They're putting resources into attracting, retaining, and training skilled personnel.
Investing in your people is always a smart move, especially in a sector that demands specialized knowledge and expertise. But let's not forget the unique context they're operating in. They're primarily working with government entities on World Bank-funded projects, which creates a very specific risk profile.
Absolutely. It's a double-edged sword in many ways. On one hand, you have the stability of government contracts and World Bank funding. Those projects tend to be large-scale and long-term, which translates into a reliable revenue stream and minimal risk of payment delays or defaults.
It's like having a safety net woven from taxpayer dollars and international development funds. But what's the catch? There's always a catch, right?
Well, the downside is navigating those notorious bureaucratic complexities that come with government projects. Multiple layers of approvals, stringent regulations. It can be a slow and frustrating process. Delays are almost inevitable.
So stability and financial security on one hand, but potential bureaucratic headaches on the other. It's a trade-off. But let's look at the bottom line. Are they actually profitable? What do their financial statements tell us about their performance?
Their financials are quite impressive. Remember that 48.55% revenue increase in fiscal year 2024 we talked about? Well, that translated into a healthy profit after tax exceeding 15 crore rupees.
Those are some eye-popping numbers. But revenue and profits can be deceiving. What about their margins? Are they actually making money on these projects, or are they just chasing revenue for the sake of growth?
Their EBITDA margin in fiscal year 2024 was 21.71%, which is pretty healthy, and it's remained relatively consistent over the past few years. This suggests they're managing their costs effectively and generating a decent profit from their projects. It's not just growth for growth's sake, they're converting revenue into actual profit.
Okay, so they're not just inflating their top line, they're actually making money. But remember, this is a long game. What are some potential red flags in their financials that might suggest trouble down the line? What should investors be watching closely?
One thing that caught my attention was a significant increase in their trade receivables, the money they're owed by customers for completed work. A jump in trade receivables can sometimes signal potential issues with collecting payments.
Ah, so it's not just about winning contracts, it's about getting paid for them. What's the explanation for this increase in trade receivables?
It could be due to the nature of their business. Large-scale infrastructure projects, especially those involving government entities, often have longer payment cycles. It's something to monitor, but not necessarily a cause for alarm at this point.
It's like waiting for a giant government check to clear. It might take a while, but you're fairly confident it will eventually come through. So we've explored their financial performance, the risk factors, those auditor concerns. But what about their growth strategy? Where do they go from here? What's the next chapter in the EMS Limited story?
Well, they've laid out an ambitious plan for expansion, geographically and in their service offerings. They're looking beyond their current operational states, particularly targeting the northeast and south of the country. They're also looking to increase their presence in the electrical transmission and distribution sector, as well as in building and public infrastructure projects.
Welcome back to our deep dive into EMS Limited. We've explored their financial performance, the risk factors, those auditor concerns. But what about their growth strategy? Where do they go from here? What's the next chapter in the EMS Limited story?
Well, they've laid out an ambitious plan for expansion geographically and in their service offerings. They're looking beyond their current operational states, particularly targeting the northeast and south of the country. They're also looking to increase their presence in the electrical transmission and distribution sector, as well as in building and public infrastructure projects.
So diversification and geographical expansion, a classic growth strategy. But it's easier said than done right. How are they planning to tackle those challenges and ensure success in these new ventures?
Their secret weapon: strategic partnerships. They've already shown they're willing to team up with other companies to secure larger projects and tap into new markets. It's a smart way to leverage expertise, share resources, and mitigate some of the risks associated with expansion.
Partnerships are all about finding those synergies right, combining strengths, filling in the gaps. But what about their internal capabilities? Are they equipped to handle this kind of growth, or are they risking spreading themselves too thin?
Remember, their focus on attracting, training, and retaining qualified personnel. They're investing heavily in building a talented workforce, which is crucial for managing growth effectively. They seem to understand that people are the foundation of any successful expansion.
It's like building a strong internal engine to power that growth vehicle. But let's be honest, we haven't really talked about the elephant in the room: competition. How does EMS Limited stack up against those other players vying for a slice of that infrastructure pie?
You're right. The water and wastewater management sector in India is a competitive landscape. But EMS has a few aces up its sleeve. Their track record and experience in executing complex World Bank-funded projects are a major advantage. They've built a reputation for delivering quality work on time and within budget, which is a huge selling point in this industry.
Reputation is everything in this business. But what about their pricing strategy? Are they the low-cost provider, or are they focusing on value-added services?
From what we see in their financials, their margins are healthy, suggesting they're not engaging in a race to the bottom on price. They're likely emphasizing their expertise, the quality of their work, and their ability to manage projects effectively as their key differentiators.
That's a smart strategy. Competing solely on price can be a slippery slope, especially when quality and reliability are paramount. But let's be realistic. Maintaining this growth trajectory is no walk in the park. What are some of the potential speed bumps they might encounter as they continue to expand and evolve?
One challenge is managing that growth effectively. Scaling a business is a delicate dance. They'll need to ensure they have the right systems, processes, and people in place to handle the increased workload and complexity. It's a lot of moving parts.
It's like juggling those metaphorical plates, right? The more you add, the harder it is to keep them all spinning. But what about external factors? Are there any industry trends or regulatory changes lurking on the horizon that might impact their future prospects?
The government's continued emphasis on infrastructure development is definitely a positive sign for the sector as a whole. But Shifts in government policies, funding priorities, or even those ever-evolving environmental regulations could throw a wrench into the works. Agility and adaptability will be crucial.
It's like navigating a constantly shifting maze. You need to be able to pivot and adapt quickly. But before we get too lost in the what-ifs of the future, let's bring it back to their commitment to corporate social responsibility. Are they walking the walk, or is it just a feel-good PR exercise?
Their actions seem to speak louder than words. They've got a dedicated CSR committee, and their annual report outlines some of their initiatives, including supporting educational programs, healthcare initiatives, and environmental conservation projects. It's not just about ticking boxes, it's about aligning their business goals with their social responsibility commitments.
So they're trying to make a positive impact, not just on the balance sheet, but also on the community and the environment. It's encouraging to see that holistic approach. But let's get back to the nuts and bolts of their business for a moment. We've talked a lot about operations, financials, growth plans. What about their technology? Are they innovating, adopting cutting-edge solutions, or are they sticking to traditional methods?
Well, their reports don't go into great detail about specific technological advancements. They do mention their in-house expertise in process design and engineering. This suggests they're keeping pace with industry standards at the very least.
Okay, so maybe not bleeding-edge innovators, but at least they're not falling behind.
Yeah.
But I'm still fascinated by their manufacturing arm. What exactly are they producing, and how does it fit into their overall strategy?
They're producing components that are used directly in their construction projects. Things like precast concrete elements and water treatment equipment. It's a vertical integration strategy that allows them to reduce their reliance on external suppliers, potentially lower costs, and have more control over the quality of their materials.
It's like they're building their own little ecosystem, right? Controlling more of the value chain. But vertical integration can be a double-edged sword. What are some of the potential downsides they need to be aware of?
One risk is becoming too reliant on their internal production, potentially missing out on innovations or cost savings from external suppliers. They'll need to strike a balance between self-reliance and leveraging the broader market.
It's about finding that sweet spot.
Yeah.
Maximizing efficiency without sacrificing flexibility. But let's not lose sight of their core focus: water and wastewater management. This is more than just a business. It's about addressing a fundamental human need.
Absolutely. And what makes this sector so compelling is its vital importance to India's future. Access to clean water and proper sanitation is fundamental to everything: health, economic development, environmental sustainability. And with India's rapidly growing population and urbanization, the demand for these services is only going to intensify.
It's a challenge and an opportunity all rolled into one. And companies like EMS Limited are on the front lines of this battle for a more sustainable future.
They're building more than just infrastructure. They're building a foundation for a healthier and more sustainable India.
It's inspiring to see a company tackling these challenges head-on, combining profit with purpose. But we've covered a lot of ground here: their business model, their financials, their growth plans, their CSR initiatives. What does this all mean for you, the listener? Why should you care about EMS Limited?
What we've uncovered suggests EMS Limited is a company on the rise. They're operating in a rapidly growing sector, they're financially sound, and they seem strategically positioned to capitalize on the opportunities ahead. But remember, no investment is without risk, and past performance doesn't guarantee future results.
Always wise words. Do your own research, consider your investment goals, and don't let our enthusiasm cloud your judgment. But if you're looking for a company making a difference in a vital sector and potentially poised for continued growth, EMS Limited is definitely worth a closer look.
And on that note, we'll leave you with a final thought-provoking question to ponder. Given the projected growth of the water infrastructure sector in India and the company's seemingly robust order book, how might competition in this space evolve? Might EMS face challenges from larger established players in the future?
Great question. Something for all of us to think about as we continue to follow EMS Limited's journey. Thanks for joining us on the Deep Dive. Until next time, keep exploring, keep learning, and keep diving deep.